All right, Candle Range Theory Trader back with you with another video on how to make candle 3 print money. Let's get going. Now, the main idea of this way of trading, of course, obviously it's still candle range theory. We're only trading candle 3. But once candles 1 and 2 close, the only model we're looking for is to take trades around fair value gaps in our direction during candle 3. But the trick is we take them above or below 50% of candle 1's range. And you can do that just using a simple fib. Doing this increases our odds for success because we don't need price to complete the entire candle range theory. We just need a piece of candle 3. So even if candle 3 retraces, and if you've been trading any length of time, I'm sure there have been moments where you've been up 1R, 2R, and then price comes back and either stops you out or takes your profit. So we're going to cut that off. So let's get going. Now remember though that not all fair value gaps will hold. So if fair value gaps gets closed or gets violated, you can take that as a signal to exit the trade early so you don't lose your entire risk. Now, here's a long example, and obviously for our risk management profile, we are trading 1-to-1. I recommend doing 1-to-1s, either 15 pip stop loss, 15 pip take profit for pairs that aren't as volatile, like Swiss pairs and Euro pound. They move very slowly. It's almost torturous to watch. And then for the more volatile pairs, do 30-30. Okay, 30 pip stop loss, 30 pip take profit. But here's an example on the 8-hour chart where we have the 9 a.m. range candle, which is candle 1, 1500 candle 2, and then starting at 1 a.m. is when our trading window begins. So what we do is we draw a fib from the top of candle 1 to the bottom. And as long as price is below this purple line right here, this is 50% of candle 1, all we're doing is looking for fair value gaps, and we take trades around them with a 1-to-1 risk reward. Okay, so since this is pound New Zealand, I would do either a 20-20 or a 30-30 for as far as 1-to-1 goes. So, and you can mix and match as well. So here's the trades. I actually took this trade too this morning. I woke up to a profit. I was very happy. But yeah, this happened just today. So, excuse me. Here's a gap right here. And the beautiful thing, the entries don't have to be perfect. They just have to be profitable. Because the thing is, you have 30 pips of breathing room. You have 30 pips of taking profit. So let's just say your goal is to make $100 a day. Obviously, you don't want to risk, if you only have a $100 account, you don't want to risk the whole account. But if you can stomach that, let's just say, okay, I'm going to risk 100 to make 100, but you don't let the fair value gaps get closed below. And see how this was just pretty much straight rise price action? So that's the part that we want to focus on. This is the type of price action we're looking for, because when the gap forms, we're looking for momentum for the trade to carry out and just keep going above the purple line here. So above the purple line, but that's the middle point. We're not trading that anymore. So as gaps start to form around it, you can take one more here. This was a 20-20, but you could have just as easily risked another $100 on this here. So that's 30-30, but it's still 1-to-1 and then 20-20, and it hit in no short order. But that's it. You just need a piece of the move. You don't need this whole move here. Okay, there's no guarantee that price is going to move exactly like this every day on a candle 3. All right, so here's a short example where you have candle 1, which is at 1 a.m., candle 2 at 9 a.m., and then candle 3 at 1700 or 5 o'clock p.m. Eastern Standard Time. All these times are Eastern. So let's take a look at this short momentum trade here. So we have the high of the day. I like getting in the first fair value gap I see. I'll go ahead and hop in. So pound yen, you could have did a 20-20 or a 30-30 on this. Either one I'm sure would have worked out. And again, the wide stop loss gives the trade plenty of breathing room. So, you enter here. Stop loss wasn't even threatened. You were out of this trade in what's that, 5, 10, 15 minutes. You were done. This could have been if you were risking 1,000 to make 1,000, this could have been $1,000 trade. Okay. And then same thing right here where this fair value gap forms and it holds. So this one did consolidate a little more, but eventually, if candle 3 is legit, all it's going to do is form more fair value gaps and then run away from them as they form. So that's typical candle 3 behavior. But the trick is, remember, we're above the middle of candle 1. Okay, let's go back. We're shorting above the middle of candle 1. Once again, we're going long below the middle of candle 1. This is our training range. All we want to see is fair value gaps in this range, and that's it. That's all we're looking for. Okay, so for some possible numbers, like I said, if you had a $500 personal account, if you were taking 1-to-1s, if you had a perfect day, you risk a couple trades. You can typically get about 2 good 1-to-1 trades on a candle 3. That's 40%. It's 40% you can make. All right. If you just have a great day, you can get 40% on a good day trading this method, trading 1-to-1s, not 1-to-3s, not 1-to-5s. Okay, 1-to-1s. Okay, That's realistic. Okay. Now this is a little more realistic though, in terms of what you may be looking at, because you won't win every trade. Obviously, like I said, some gaps will fail. So let's say you have a $500 account and you lose the first two, but remember that just because you risk 20% doesn't mean you lose 20%. 20% of 500 is $100. So this first trade you lose 50%. Okay, that's about 10%. Okay, and then the next trade you lose $30. Okay, so you've taken two losses for the day, going for a 20 to 20 didn't work out, and 15-15, but it didn't work out. But then you win the next two. So you win. Your balance is now at 420 because of these two losses here, but you're still risking 20%. And let's say you win this one on a different candle three, and then you take one more, 1-to-1 on another candle three. Okay, or the same one, either way, it doesn't matter. But the point is this: you've lost 80 and you've won, was that 185? So your total return on that day, your balance went from 500 to 605. You could just as easily pull out 105 for profit or 100, whatever, and then do it all again tomorrow. Right? This is how your day may look. Okay, you'll have a few like this, but a good number of them, you'll have one loss, one win, and just as long, like I said, as long as your wins are bigger than your losses, you'll be fine. I promise you'll be fine. So in conclusion, if long, do not trade above 50% of candle one. Okay, just don't do it. If you're short, don't trade below half the range of candle one. Okay, those are the highest probability that you're going to get for candle three. That way, even if candle three comes all the way back, you're out. Okay, you should have been done by that point. Now, if you use a fair value gap for entry, be sure to take its disappearance or erasure as a sign that you could be wrong. Okay, keeping losses small is how you're going to stay in this game. Not winning big. It's not the big wins that are going to keep you in. It's losing small. It's only losing $10, $30, whatever. Making 100, 200, 300. Okay, you're not going to get those big wins unless you master how to keep your losses small. Now, some trades are going to hit your stop loss. So don't risk more than you're willing to lose. Don't risk 20% just because I'm willing to risk it, because I'm comfortable with that. 20%, though, is a large amount. Okay, but I'm confident in my setup. I know that if I lose one, I'll win the next one. Okay, hopefully. But if you're not comfortable with that, then the bigger your account is, you don't have to take the whole 20. If you just want to do risk 10% to make 10%, that's fine too. On $1,000 account, that could still be $100 a day. So, or more. So this setup, this whole method is not about being right for hundreds of pips. Okay, this is just about taking withdrawals on small price movements, and you can turn this chart into an ATM machine based on those small predictable moves that I just showed you. But if you can't manage risk, you're wasting your time, you're wasting your money, and you're only making your broker or your prop firm richer. They love you because you keep buying challenges and keep making deposits, and you make zero withdrawals. You're keeping them in business. Okay, so I'm going to ask you to cut that out and turn the tables. Okay, show up as a liability on their balance sheet instead of an asset, but only you can make that change. I'm giving you the best I got here. Experiment with one-to-ones. Try this on demo. You don't even have to try with real money. Just spend one day and try to one-to-one on demo, and I promise you will see a difference. Okay, so I appreciate your time and attention. Don't forget to subscribe. Thanks for watching, and have a great rest of your day. Take care.